The March quarter wage growth numbers, they've just been released by the Bureau of Stats. Let's go live to our business reporter, Ed Boyd. Wages have grown at an annual rate of 4.1%.
Wages up 4.1%, Kieran, at an annual rate, but it's a little bit below what the market was expecting. Economists were predicting wages to grow at the same rate as last year, which was 4.2%. Over the course of the first 3 months of the year, wages lifted over that period by just 0.8%. The market was expecting 0.9%. So wages have undershot expectations very slightly. You can see here's the key figures. Quarterly up 0.8, annual up 4.1. Looking through the stats, though, from the Bureau of Statistics, they do call out private sector wages rose 0.8% in the quarter. Public sector wages lifted slightly less at 0.5%, seasonally adjusted. The big contributors to quarterly wage growth were professional, scientific and technical services. Wages there were up 0.7%. Education and training sector was up 0.8%, and wages in the construction sector lifted by 0.7%. So what these numbers tell us is Australians are still getting pay rises, and when you compare the March quarter for wage growth at 4.1% with inflation in the quarter, which was at 3.6%, then you get a increase there with real wage growth. So you've got wages clearly outstripping inflation in the first quarter of this year, and it's something that we saw late last year as well. For a long period of time, wages had been under the rate of inflation in our economy. To real terms, wages have been going backwards, but now they've started to go in the right direction. People are getting more wages than inflation, and it's going to be helping people at a tough time that we're seeing at the moment.
And Ed, yeah, it certainly is that, no doubt. The Treasury forecast also expecting wages growth to beat inflation, importantly, over the forward estimates.
Yeah, these were some pretty significant forecasts that we got in the federal budget last night. We can put them up on the screen, but basically it just shows how much more Treasury is expecting wages to outstrip inflation over the next few years. So you can see here that wages are going to be up by about 0.5% over the next 2 years, and then it actually increases to a full 1 percentage point in 26-27 and also in 27-28. So we're seeing real wages growth expected to actually increase over the next few years. Which is good news for a lot of Australians out there, which have obviously been struggling for the past few years with inflation being so high. We're finally starting to see the scale tipped in the other direction, with wages now outstripping inflation. And looking ahead, we've obviously got the next Fair Work Commission decision coming up later this year. That's expected to be not as big as the wage increases we saw last year, but expect wages to remain pretty elevated over the course of this calendar year, and obviously going ahead for the next 3 years as well, Kieran.
Ed, before you go, what's been the stock market reaction to the budget?
Well, this morning, the stock market opened up almost 1% in early trade. When you think about the budget giving $300 to every household to put on for their electricity bills and then $325 for small businesses, you can see here the market was up almost 1%. It's come back a little bit, but still up pretty strongly. That extra money in the economy will go to the sort of retail sector. People are going to be spending money on things like furniture, shopping, etc., etc. And those stocks today have actually lifted in early trade off the back of that. You've also got the Aussie dollar here, which is basically flat up about 66.3 US cents at the moment. Dollar is still quite a bit lower than the US greenback right now, but we've seen a positive market reaction to the budget, and it's still up pretty well after the wage numbers have come out.
Okay. Ed, thanks for that.